Hello everyone, I am Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are once again with another episode of understanding the global macro trends, domestic factors, and its impact on several currency pairs. Let's first talk about the most awaited number, that was the CPI number both for India as well as US. Talking about the number of US first, it came in at 3.1% versus the expectation of 2.9%, which means definitely the CPI number came in much hotter than expected. But if we compare the same number with last print, that came at 3.4% in December. Now, because the number came in higher, there are several reasons which need to be understood. That is, first is the food index is rising. Second, the rental income or the rentals for the housing index is rising. These are the two major concerns which the US is facing, due to which the inflationary pressure is rising. Thus, if we break down into core inflation also and the numbers, it came in at 3.9% versus the expectation of 3.7%. Now what is happening, initially when the discussion started during the year, people were expecting or anticipating the rate cuts will start in March 1st. But then what happened was the data points for labor, for PMI data, they came in quite positive, and then the shift from March possibly happened to May. Now after this CPI print coming hotter than expectations, further the shift is going to June. So the rate cut expectations from the Fed is now moving towards June. On the contrary, if we talk about the India's inflation, that is CPI number, it came in at 5.1% versus the expectation of 4.82%, where the last print was around 5.69% in December. Food inflation and core inflation both cooled off, that is softened quite sharply, which was a positive sign. But yes, as compared to the anticipation, it was still not at mark, or maybe you can say a bit higher. But if you talk about purely core inflation, it was at around 50-month low. So the inflationary trajectory is definitely seen cooling off, but yes, as compared to the expectations, it's still not at par. That is what we can say, and thus the rate cut trajectory is moving more towards the second half of the year. Similarly, if we talk about the Fed speakers, they have been quite hawkish. They have been giving that equal importance to inflation even now, and they feel that it may take some more time to assess more data points coming in, and inflation consideration may be more important for a couple of months before taking a final call of going for a rate cut. Third is important aspect of the Brent crude prices, which is hovering around $82 per barrel. Now, a lot of people have been ignoring these geopolitical tensions because probably the focus is more on the data points at this point in time. But these geopolitical tensions which are rising in Middle East can have a huge impact overall on terms of the trade also. So it cannot be ignored. It has to be a point in mind, while taking any hedging or maybe trading positions as well. Even dollar CNH pair, there is slowdown in Chinese CPI has been lower than expectations there. Demand slowdown is definitely a part of it. But if you see the dollar CNH levels hovering around 7.22, so rising crude prices as well as probably rising prices in terms of the dollar CNH pair is somewhere lethal for dollar rupee pair. That is why we have seen dollar rupee moving below 83 levels toward 82, 85, 82, 90 levels. But we have been seeing some kind of bounce toward 83.10, 83.15 once again. To boil this down to more understanding, let's understand dollar index, because after the data points of the US, which have been quite positive, dollar index rallied towards 105 levels. We see 105.80 as an important resistance when it comes to the dollar index. If we break down into currency pairs, for euro dollar, we see 1.0650 acting as a support, with 1.0820 acting as a resistance. While for if we talk about a dollar JPY pair, we anticipate 148.20 to be a base, where the other side would be 152.20. And if we talk about the GBP pair, 1.2480 remains a support, with a resistance at around 1.2720 levels. So these are the broader levels, but particularly if we speak about dollar rupee pair, considering the year end coming and approaching near, which is the March end, we still see sell on rise kind of a market for dollar rupee, with 83.30 acting as a very, very crucial resistance, and we see it to go down towards 80 to 70 levels as well. So that's all from my side, friends. Thank you so much all, and I really wish that these insights are quite helpful to everyone. Thank you.